Hi everyone, let's go over my bullish and bearish Elliott Wave scenarios on Bitcoin, and for the newer viewers, check the timestamps on the word new, updated or same regarding the scenarios. Starting with this medium time frame bearish scenario where we're looking for a zigzag ABC to the downside in a 5-3, and then we expect a 5-wave move down in wave C, where the most common target for wave C is between the 1 and the 1.236, taken from the high to the low of A to the high of wave B, sitting between 24.3k and 22.6k. In this scenario, a common target for wave B is still the 886, which is pulled from the high to the low of A, and you can see the 886 is in very nice confluence with the key level that I have at about 31.1k, and that is this little pivot over here. So if I zoom in, what you can see is that we have a gap over here, inefficiency, fair value gap, whatever you like to call it, but the high of the gap is this pivot over here. So one could fill this gap, find this as resistance, including the resistance area that I have, additional resistance between 31.1, 31.3k, for then potentially that move to the downside, which means that more locally, I'm actually still looking for at least a little bit of a move to the upside, because hitting the 886 would be nice. And then of course, then a bearish scenario, you would like to move away from the 886. You don't really like price to then come back to the 886. The moment this happens, probabilities are much higher for price to continue towards the upside. The 886 is like a touch and then a go, and also the 886 has a higher probability for a wave B or an X and is a low probability for a wave 2, meaning that any move coming from the 886 to the downside has a higher probability to be a wave C or a wave Y instead of a wave 3. Something else that you see on the chart is the golden pocket. This one is very important as price has a tendency to touch the 886, move down towards the golden pocket, and this is then a make or break. Either you move back towards the upside to the 886, or you're eventually going to break the golden pocket and look for lower prices. Golden pocket sitting between 29.2k and 29.5k. Now in this scenario, you then expect the double bottom to be taken, double bottom over here at 24.7k, which is always like a magnet for price. So it's quite surprising that so far we haven't actually touched the double bottom or taken the double bottom on my chart at least, because Bybit has a big wick to 23.6k, already took this low, which increases probabilities that other charts will also take this low. Besides, wicks on the Bybit chart tend to get filled. If you go to the Bybit chart, 12-hour to daily time frame, and you go through history of price action, you will see that the probabilities are very high to fill those wicks. Now the wick goes to 23.6k, which matches with the support area that we have here as well. If we then zoom in to this wave B, what we are looking for is a double zigzag structure towards the upside. In wave W, we then have a zigzag ABC, a 5-3-5 structure hitting the 1-to-1 as well, taken from the low to the high of A to the low of B, which is a common target for wave C. Then a retracement to the downside for wave X, before then another ABC to the upside, where a common target for wave Y is between the 1 and the 1.236, taken from the low to the high of W to the low of wave X. And you can see that price is right inside this area. But what's interesting is that the 886 and the key level are right on top of the 1.236. So that's some additional confluence to look out for as well. Now you can also see that over here for the blue wave B, I added the golden pocket, and this is important because price moved to the upside with that news wick right here, and then came to the downside immediately. And what happened is that price moved to the downside, hitting the golden pocket, which is taken from the low of X to the high of wave A. And the golden pocket is a rare target for example, a wave 4, but a common target for a wave B. So that can increase probabilities. We might have potentially a wave B over here for then a C towards the upside. If we then zoom out once more, look at the 12-hour time frame for the bullish scenario, then we have a flat structure, which is a running flat. Now I have to say a running flat is the most rare flat pattern out of the flat family. Expanding flats are most common, where you actually take the high of wave A, but then wave C ends below wave A, which is not the case in this scenario. Then you have a regular flat where also wave C takes the low of wave A and B takes the high of A. But here you can see wave C does not take the low of wave A, which is incredibly rare, especially on the higher time frames. But in this scenario, you have a zigzag in A, zigzag B, and then a 5-wave structure in C. That's the end. You're going to be looking for a move towards the upside. This move to the upside, currently highest probabilities would be a double 1-2 scenario. In this particular scenario, we're then looking for a 1-2 in green and a 1-2 in blue. Now you can clearly see the invalidation on the chart. That is important. If over here wave 3 is in, what you want to see is you still want to see a wave 4 before then a wave 5. You want to at least take the high. Now a wave 3 can extend, it can go to higher targets, but a minimum target usually for a wave 3 is the 1.618 pulled from the low to the high of blue 1 to the low of the blue 2, which has been tagged perfectly, as you can see over here. But after wave 3, you want to see a 4 and a 5. And that is in contrast to the bearish scenario, where you want to see a high being made and then continuation to the downside, where you take this high, you're going to reach 28.6k here, 28.5, and that then invalidates the double 1-2 scenario. So that is the main difference between the bull and the bear scenario. It's what comes like, if you get a retracement, it's how deep that retracement goes. Now in this particular scenario for wave 4, most commonly the 382 to the 05 is being hit, which currently sits around 29.3k to 28.7k. And what is for me very interesting is how this double 1-2 has been shapen basically. So we have a 1, 2, 3, 4, 5 in green, and then in blue we have the 1, 2, 3, 4, 5 lower degree count compared to the green count, because inside green 3 we have the blue 5-wave structure. But this wave 1 is a little bit longer in time, or sorry, a little bit longer in price compared to the green wave 1, and wave 2 is longer in price and time than the green wave 2. So the lower degree Elliott wave count is actually a bit bigger than the higher degree Elliott wave count, and it just doesn't really sit well with me. Another thing that I think is interesting is the volume. You can see that I have the volume on my chart, and I actually want to zoom out to the 12-hour. And just having a look at the volume, if this is a 1-2, 1-2 and then a bigger 3, then at the moment the volume is actually quite weak. Look at the volume over here, right? Yes, we have the Newsweek high volume, but you want to see a high average volume, because your wave 3 after a 1-2, 1-2 and a big push in a wave 3 should be the biggest, most impulsive, highest volume move to the upside, and this is where you want to see the push. But at the moment, we're actually making a new high on lower volume. So either this wave 3 is already in, but then volume was quite disappointing, and you're going to go for a wave 4 and a 5, or this scenario has lower probabilities. And it kind of like reminds me of the all-time high, because when price was moving to the upside, when we went towards the all-time high, we had this structure over here. We had a 5-wave move to the upside, all good and nice, then down and another move up. But during this move towards the upside, I kept an eye on the volume, and I just didn't trust continuation to, let's say, 100k. So the moment over here I saw bearish CVD divergences, that was my short position, stop loss above the high. Now, I kind of get the same scenario where I don't really see the volume picking up. Now, I do think that if price can manage to take this high, volume might increase, as people then have, of course, like a bit of FOMO, for example. So that is when they start buying. But as long as this high is not taken, I'm still in a little bit of doubt. Now, if you then zoom in to the micro bearish scenario, or quote unquote bearish, basically, what we are then looking for is a 1, 2, 3, 4, 5. And this is where it's important that I explained with that ABC scenario that the 618 is a rare target for a wave 2. In this scenario, you then have a 1, 2, 3, 4, 5, but the low over here hit the 0.618, which usually is an invalidation for a wave 4. It's an extremely rare target. Of course, this is quite of an anomaly, but still, this is extremely rare for a wave 4, lowering the probabilities for a wave 4. But after this 4, you're then looking for a wave 5 to the upside. Most common target of 5 between 1.236 and the 1.618, taken from the high to the end of 4, which again is kind of like in confluence with then the key level, the 886 6 as well. And then we have to wait and see what happens afterwards. If this wave 5 is in, then either in the bearish scenario, you're going to move towards the downside as wave C and Y are in, and you look for much lower prices to come. But in potentially a double 1-2 scenario, the high of this wave 5 can be the high of your 3, and then you're going to be looking for a retracement before then continuation to the upside. Again, important, you don't want to see that invalidation being hit. In the more bullish scenario, you could even think about a triple 1-2 scenario, 1-2, 1-2, and then another 1-2. But then again, this wave 1, even lower degree than the blue wave 1, is longer in price than the blue wave 1, which is not really what you prefer to see. And also, where's the volume, right? Where's the volume? It's just something that's bothering me so far, right? The volume over here at the moment is not that great. So it is something that I definitely keep my eye on. If we then finally zoom in to the 1 hour time frame and have a look at this range over here, then this is currently a bullish scenario, because after an ABC you expect continuation to the upside. Now this is definitely an alternative scenario. I just like to show it because we found it on the stream, where you have an A, W, X, Y, and B, and then a wave C. The 1.618 has been hit, less common for a wave B, but then you expect a move towards the downside in wave C. Before then continuation, invalidation is clear above the high, and in a more bullish or eventually potentially bearish scenario, you just expect another move to the upside and then a move down. What is important here is the invalidation again. So in this scenario, we're then looking for 1, 2, 3, wave 4, wave 5, where a common target for wave 4, 3 to the 05, which has been hit over here. The invalidation is 30.1k, where you have the 0.618, right? So you don't really want to see price moving here, as that would invalidate a wave 4 and lower prices are expected. Of course, that is before the high is taken. The moment the high is taken, price can retrace below this invalidation level without any problem. If we then look at the probabilities of the different scenarios, then, well, on the medium time frame, I have neutral question mark, because you're basically having a zigzag versus a running flat. And if we look at a zigzag structure over here, corrective zigzag structure, and we compare it against a running flat, then from an Elliott Wave point of view, a zigzag will always have higher probabilities than a running flat, because a running flat is so incredibly rare. On the lower time frame, we're comparing a double 1-2 after the running flat with a sharp WXY. We have over here WXY double zigzag, and we compare it against a double 1-2. Now this one is more difficult. Both have kind of equal probabilities. The thing with the double 1-2 though is the second 1 and second 2 are bigger in time and price than the higher degree 1 and 2, which is actually not really what you want to see, and the volume really has to pick up. So again, it's very, very important when price is going to do around the 1.236, like 31.1k area, and a potential rejection that we get there, or continuation, right? If we get continuation, it makes life easy. If we get a rejection, the rejection is going to decide what's going to be next. On the micro scenario, well, in the micro bearish scenario, again, we're looking for volume moving down, and locally, we're also looking at the moment towards the bearish scenario. So on the micro, we do expect another move up for 5 to hit the 886, as well as fill that key level over here at 31.1k, hit that one, and then potentially a rejection. This currently looks like the highest probability scenario very, very locally, and the same is true then for the most local price action here, that we could be looking for a 4, another 5 to the upside, hit the key level, reject there, and then take it from there. I hope this video was helpful or valuable to you. Please check out the most recent educational video I've made about the best trading indicator you can use in my opinion, which is the CVD. And for now, thanks for watching and subscribing, and I'd like to see you at the next one. Bye bye.